Welcome back, Crypto Crew. It's your boy Tom back at it again, updating you on the latest Bitcoin action. So please make sure that you come on over to X and follow us on X because we talk about all things altcoin, Bitcoin all day, every day. And if you haven't done it already, you know the drill. Smash that like button, hit subscribe, and let's dive into the chaos. All right, let's get into it. The market's been really wild lately. Actually, it's been coiling and it's getting ready to make a major move. And we were saying, up, we're expecting explosion upward, but we have to be cautious for the downside as well. So I want to point you to what we have posted on our X right here. This big Bitcoin whale short just tapped out. Okay, he closed his entire 525 million short position. Now, before we even make any type of judgment on that, what we have to do is really I have to give kudos to this guy, because there is a couple of things that are at play here. There are two types of capital in the world of trading, all right? And most people focus on the money capital. How much money do you have and how much risk can you assume with that money? But there's another more important capital, and it's called emotional capital. And by this guy putting it out there on the, on the exchange for everyone to see how big of a position that he had, he was definitely expending emotional capital. So really the most important thing, with emotional capital is trading within your means. So how much money do you have to how much risk you can assume? Now, obviously, I'm assuming this guy is definitely a professional trader. So, that loss would have been something that he could have absorbed. But however, with the whole world looking at his position, think about the pressure the guy was under. I mean, or gal, okay, so I gotta be open to both sides of this thing, right? I can't be just, I cannot be my usual chauvinistic person that I am. But, the pressure that this trader was under was intense because everybody was focused in on this guy, and they were gunning for him. The bears were like actually rooting for him, and the bulls were actually gunning for his position. So he came within like $300 of being tagged out. And we just got to say, as a trader, one trader to another trader, unbelievable that you would take this type of position. That's conviction. It's awesome. And it's also awesome when you have the ability to change. Say, look, maybe I'm wrong with this thing. Let me scale out of this thing. Let me get out of it. The first indication was that Ethereum position yesterday. But anyway, let's get into it. What are we talking about right now? Right now, he cashed out and it's sending ripples through the cripple ocean. But, hold on to your seats because all eyes are upcoming on the Federal Reserve. And that's a really important meeting that we're going to be having. The Fed's next move could be a game changer for Bitcoin. And it also could possibly start off that altcoin market that we've been talking about. So, if they we really don't expect them to do anything with rates per se, but if they start talking dovish, the marketplace actually could, take that as fuel for the crypto market and the altcoin market. So we could see a flood of liquidity hit the markets, and as you know, what that means, Bitcoin could get a serious boost. But now let's get into this chart here. Okay, we have a couple of things that we have to be concerned with. We have a rising wedge pattern that really is starting to fall a little bit out of the downside of the wedge, which is which could be some concern to us. Now, we've been talking about the 80,000 level for quite a while, and that level is a very, very important level. At 80,000 is the first warning level for Bitcoin. Okay, so if Bitcoin was to drop below 80,000, most likely there's going to, this fear and greed is going to start to really start ramping up into the fear, and people are going to start to puke positions, which is understandable. We've been waiting for this breakout for a few days, and a few days in trading is extremely long term, for the short term traders anyway. So we have our level at 80,000 as a really important level for Bitcoin to hold. So I'll put it right down, right over there. That's fine. 80,073. That's a very important level. Also coincides with this little bottom that we have before we tried to take out the top. If this level breaks, we're most likely going to be testing those old lows again of 76,000. Now, there's a lot of people that are looking to accumulate coin. For the short-term trader, just got to be cognizant of price action and understand that this marketplace could slip to perhaps even 73,000. Now, that whale exited. Now, and why did he exit? Maybe he knows something about the Federal Reserve meeting that we don't know. Maybe they're going to really come in dovish and then we can basically break up in this. But it's just something that we have to keep our eyes on, all eyes on the charts. Now, if I go back to a little bit longer of a time frame, a weekly time frame, what we're looking at here is Bitcoin's at a crucial level. We're looking at that, 50 EMA, 55 EMA. So if that level breaks, we could be going down. And that level basically coincides almost very closely to the level that we're talking about, the 76,000 level. So if that level goes, we're targeting 68. However, we have a bearish cross here, but if we look a little bit deeper, we got things that in history that are showing us that this bearish convergence that we have right now, where we're looking at the RSI, it's a bullish divergence right now. We've seen it. Now, this is only a 2-day chart compared to the longer term. So we got to put everything in perspective, okay? Obviously, longer term has got more weight and more value. But this 2-day chart is showing the bullish divergence. So, bullish divergence, right? What is actually, if people don't, aren't really techno files like we are, bullish divergence is basically prices making lower lows while the RSI, the relative strength index, is trending up. And the last time that happened, we got a pop, and we got a big pop in it. So this is something to keep an eye on as well. Now, where I think the breakout upside is concerned for Bitcoin itself, I believe that if you see a break of 86,000, we've been talking about these levels. It's not like we're just coming up with them, out of nowhere. Like this 86,000 would be the first level that we need to break in this rising wedge to start to get up to that 92,000. It's going to have a short-term stop at around 89,000 where people are going to be that are just fed up. They're going to take some profits and, push it back down. Most likely, technical analysis says they should push right back down to this top right here, around 86,000 is where we have the breakout. And then the marketplace should be able to continue off on its merry way up to that 92 and start to basically do one of those type of things. So we got a lot of wood to chop in here. Now, here's where it gets really dicey. If we go over to our X, we have a post here where we have a master here. Ki Young Ju said the Bitcoin cycle's over. I don't know. Then you got the other side, Michael Saylor, saying that this is a joke. I mean, it's going a lot higher, but we do have to pay attention to this crypto quant guy. It gets juicy here because the big brain behind Crypto Quant just dropped the bombshell. He's calling the Bitcoin bull cycle is donezo. He's predicting 6 to 12 months of bearish vibes or sideways action. Yeah, I mean, of course. I mean, we could go long-term sideways. That's absolutely a possibility. But, if you look at this, we've been saying all along that the breakout of 86,000 is actually going to send us back higher. But is it going to go to all new highs at that, at that time? You tell me. But the rising wedge is definitely in play here. And we got to pay attention to these levels for short-term trading. So, what's the play? Do we take this guy, Kim Young Ju, as gospel? Or do we look at Michael Saylor's idea? You tell me, leave it in the comments below. But we're giving you the points here. Like we said, the 2-day crypto market is showing the divergence, price making lower lows, but the RSI is trending up for the short term. That would mean that we have a good potential if we break out of that 86, to revisit, 92, potentially even like 102. But right now, all eyes are on this bearish cross, for the longer term on the weekly. So we're all paying attention to, this EMA right there. It needs to hold the line in the sand, or perhaps we're dropping a little bit and going into what, good old crypto quant brain is saying, that we're going to go into a consolidation, which is fine. Consolidation is fine, but short term, remember always, watch that price action. Please always come back to X. Follow us on X, because this is where we talk about all things crypto every day. We give levels out. We talk about what's happening. So you could stay in the know with us here. Make sure that you like and subscribe our videos also here. Leave some comments for us. Tell us what you think. And remember, as a short-term trader, always enjoy the party, but dance near the door. Cheers.